Most people think their money is safe in the bank, but one hidden system can lock it instantly without warning. A bank account freeze happens because banks are not just storage places for money. They are heavily controlled financial systems that must follow strict U.S. laws designed to stop fraud, money laundering, terrorism financing, tax evasion, identity theft, and illegal transfers. Every dollar that moves inside a bank is tracked by automated systems and human compliance officers. These systems run all day, every day, scanning behavior patterns, transaction speed, sender and receiver history, location signals, device fingerprints, and account activity consistency. When something looks not normal compared to your past behavior or compared to legal banking patterns, the system can automatically flag the account for review. When a flag happens, the bank can place different levels of restriction. A soft freeze may stop outgoing transfers but still allow deposits. A hard freeze can block everything, including withdrawals, card usage, and online access. In some cases, the account is fully suspended while the bank's compliance team investigates. This is not always because the customer did something wrong intentionally. Sometimes it happens because the system detects risk patterns that resemble fraud or illegal activity, even if the person is innocent. Banks are required under U.S. federal rules like the Bank Secrecy Act and anti-money laundering laws to investigate suspicious activity. They also follow guidance from regulators such as the Financial Crimes Enforcement Network, FinCEN. If a transaction matches certain risk triggers, like large sudden deposits, frequent cash movement, international transfers to high-risk regions, mismatched identity information, or payments that resemble third-party laundering patterns, the bank may pause the account to review it. Even legal transactions can get flagged if they break a customer's normal behavior pattern. Once frozen, the bank starts an internal review process. This can involve checking your identity records, KIUIC, Know Your Customer files, reviewing transaction history, analyzing where funds came from, and verifying whether the money source is legitimate. In some cases, the bank may file a Suspicious Activity Report, SAR, with federal authorities. The customer is usually not told if a SAR is filed, because by law, the bank cannot disclose it. The timeline of a freeze is not fixed. It can last from a few hours to several weeks, depending on complexity. Simple identity issues may be resolved quickly. More complex cases involving large transfers, international wires, or unclear fund sources take longer because banks must document everything for legal protection and regulatory compliance. When an account is frozen, the customer must go through verification steps. This usually includes providing government-issued ID, proof of address, recent bank statements, proof of income, or source of funds like pay stubs, invoices, contracts, tax returns, or business records if self-employed. The bank may also request explanations for specific transactions. If the case is more serious or involves legal scrutiny, the customer may need to involve an attorney, especially if law enforcement or subpoenas are involved. The resolution process is controlled entirely by the bank and regulators, not the customer. If everything checks out, the freeze is lifted, and access is restored. If inconsistencies remain, the account may stay restricted longer or even be closed, and funds may be returned by check or held until cleared. There is no safe or legitimate way to trick or bypass these systems. Attempting to exploit banking controls, hide transaction sources, or manipulate compliance systems can trigger stronger restrictions, permanent account closure, or legal consequences. Banks are built specifically to detect those behaviors, and modern monitoring systems are extremely sensitive to manipulation patterns. In the end, account freezes exist because the banking system is designed to protect the financial network from abuse and illegal activity while still allowing normal users to operate. The same system that protects your money from fraud is also the system that can temporarily stop it when something doesn't match expected rules, and every freeze is handled through verification, documentation, and regulatory review until the account is proven safe to operate again.